Hello traders, Gary Wagner here. It is 11:30 in Honolulu, 5:30 in New York on Monday, first day of May 2023, and this is the Daily Report for Gold and Silver. An interesting start to trading on the first day of May, with gold breaching 2,000, trading to a high of $2,015.40 before declining, breaking back below 2,000, resulting in a $7.80 decline for June gold, which is currently fixed at $1,991.30, a decline of 0.39%. When we look at the dollar, we can see that gained 0.48%, which means that there was fractional buying in gold today. The index is currently fixed at 101.885. Lastly, silver had a fractional gain of approximately 2 cents, with the most active contract currently fixed at $25.24.5. Although we have absolutely been trading in a defined range with lows at around 1980 and highs at approximately 2020 and higher. And that is because you can see we've had a series of lower highs as we've moved through time here. I've pulled up this daily chart to really show that we are absolutely in a full bullish scenario. We can say that for two different reasons. First of all, when we look at our moving averages, the 50-day in green, the blue is the 100-day, and the 200-day in red, we can definitely see that these moving averages are not only in proper alignment, meaning that the 50-day is on top, followed by the 100-day, and then the 200 on bottom, but we can see that the distance between the 50-day and the 200-day, if anything, has been widening. It's when they begin to narrow that we would look for a change in momentum. The other thing is the series of higher highs and higher lows that we have witnessed, really with the first higher high occurring on the 15th of November last year, and that really broke the entire cycle of a series of lower highs and lower lows, because following the lower high and the lower low, we had a succession of higher lows, and that continues up to the current low that has just come in, as I said, at around $1,980. Those things combined really tell me that the possibility that we will breach the $2,000 an ounce ceiling is high. I believe that it's only a matter of time, and especially since the X date is coming much sooner than previously believed, it's going to be a big fight for the legislation, the Senate, the Congress, and the administration to come to a compromise so that they can keep the country running. But dealing with the debt ceiling is still a month away. It will be Wednesday when we hear any news from the Federal Reserve about a rate hike. It's widely anticipated and I believe factored into the market that we are currently looking at a 0.25% rate hike and most definitely a pause after that. If they make an announcement that they're still looking to raise rates after the 0.25% rate hike, I think that could be detrimental to gold. And I think that if they mention the fact that they're looking to pause rate hikes, that could take gold past $2,000 per ounce. We're looking at a 240-minute candlestick chart, and really in terms of any kind of trend or pattern, the most important thing that I can point out is that we have had a descending top, a series of lower highs, where at the same time we've been getting equal lows. That's called a descending top and a flat bottom. And this means that I believe that there is very strong support at $1,980. We've challenged and successfully traded back above that on multiple occasions over last month. And when we look at the descending top, that is what we want to be sensitive to. And if it breaks above 2,000, On a closing basis, that is good, but we really want to break above this upper trend line on a closing and sustained basis before we can say that gold is broken out of the sideways trading action that has really defined the last 2 weeks in trading. Until it does that, I'm reluctant to enter a trade because we do not have a defined trend. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.